Dustin's Dollars. Today I'm going to have just a very quick video as a follow-up to my last video walking through a venture global valuation model. And I want to answer this excellent question that I got from Matt Money. I'm going to walk through that in just a moment. This is about the 15% portion of the Henry Hub price that is incorporated into Venture Global's sales and purchase agreements and how I incorporated that into my valuation model. Before I begin, let me remind you that I'm not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I currently hold a long position in Venture Global, so this video should be for your entertainment purposes only, because I could be wrong about everything that I say in this video, and you need to do your own research before making any investment decisions. So I'm going to read this question that I got, question/comment that I got from Matt Money real quick, and then I'm going to give my answer. Just a little bit too much to write out, so I want to make a very, very short video. Again, this is not going to be a big walkthrough today. This is a follow-up to my prior video. If you haven't seen that, you may want to go look at it. It's walking through this big valuation model here. Anyways, so this is Matt's comment. He says, "Hey Dustin, great walkthrough. I'm wondering if you count the 15% uplift on natural gas, which may not seem like much, but at $3 and a 30 to 40% ops margin, it can add 15 cents or so per MMBTU sold to the bottom line in cash flow, which could be upwards of $500 million per year from CP, CP2, and the Plaquemines. I believe you mentioned in the beginning, but could be substantial increase to annual income, even way more if Henry Hub gas does go back up to $6 per MSCF. Yes, so I did include this in my model, except really what I did was when you look at Venture Global's costs, Venture Global has to, and Matt, you know most of this, of course, not necessarily addressing this to you, but to the general viewing audience, they have to purchase the gas, get it transported to their facility, and then liquefy it, and then of course load it onto the ships before they, for most of their contracts that are free on board at the point when they actually load it onto the ships to be shipped to whoever the customer is. That is where they are basically done with their portion. And in my model, if you notice, my model for profit is basically just whatever the margin is on dollars per MMBTU. I also modeled out their operating expenses, but this is a different line item in their actual financial statements. And so really I kind of glossed over entirely the cost of purchasing the gas and liquefying it, other than to the extent that they have this operating and maintenance expense. And so the reason why I did this, I actually had some thought behind it. I wasn't just kind of glossing over for no reason. When you go and read sort of the definitions of which expenses fall where, and let me go to maybe one of their 10Qs. This is their quarterly report from the third quarter. You can see, of course, revenue. Everybody knows what revenue is, but then they have their operating expenses broken out, and they have cost of sales separate from operating maintenance expense. And so really this comes down to what is incorporated in each of these numbers, because my model only actually subtracts off the cost of the operating and maintenance expense, and that is what I modeled out. And when I go back and I look, and I kind of glossed over this cost of sales. When you read in detail in their S1 is how do they define cost of sales, and they say cost of sales is comprised of the direct cost of producing LNG recognized as revenue. So it includes the cost of purchasing and transporting natural gas used to produce the LNG. And then there's a bit more somewhere down here where it says it also includes the cost to liquefy. Oh man, I even went to the wrong line here, but this is meant to include the cost of liquefying the gas. It's somewhere further up. I actually went to the wrong line here. Sorry about that. But if you read in their S1 somewhere else, maybe it's under cost of feed gas. Is that where? Why is this going so slow? It's not going to what I want. Let me see if I can find this real quick. Otherwise, I will just move on. But the point was, somewhere in here I read it, and it was very explicit that the cost of, yeah, I'm not finding it. I don't know why my search function isn't working. Very, very bizarre. But this cost of sales, as far as I can tell, does include the cost of liquefaction, not just the cost of gas. And the numbers do support this. So when I looked at this, I put together a small sheet here to say, broken out by facility in the past couple quarters, but really Q3 is the one that matters on what I'm going to go through. I looked at how much LNG was actually exported in that quarter. What was my estimate of their average Henry Hub cost that they paid in that quarter. And in particular, I looked at the first 2 months of the quarter, and then the last month of the quarter before it, because I'm assuming they're purchasing the gas a little bit before they actually are able to then liquefy it and load it onto a ship to book as revenue. So, for example, for Q3, I assume that they actually the 3 months that I used would have been July and August, and then also June as the last month of the prior quarter. So those 3 months worth of average Henry Hub prices is what I included for that quarter here. So if you multiply those out, you can get how much did they actually export, what was the rough cost at Henry Hub, you can get what was their cost of the feed gas. And when I subtract that cost, my actual computed cost of feed gas from what they report as their cost of sales, you can see there is always this additional margin where they say, hey, this was our cost that's way above just the base cost of the gas, which makes sense because that cost of sales, again, as defined, as if you read through in their S1, actually includes the cost of liquefying the gas as well, the transportation and the cost of liquefying. And so then I express that as what is a percentage, right? If I look at how much did they spend on the gas, and then what were those additional costs that it took to transport and liquefy that feed gas, what is that percentage? And when you compute it out, it actually looks pretty close to 15%. Both in Q3. In Q3, it was I computed at 14.5%. You can see here, and then there was some variation between Q1 and Q2. And if I took also just an average of the full 3 quarters that we have, Q1 through Q3, that came out to 15.75%. And so that's close enough to 15%. Again, there's going to be some variation. This is not exact, but that's close enough to 15% for me. Oh, sounds super low. Yeah, on that topic, I did adjust the volume. I'm going to adjust this in real time. I tried to make it, last time I got some feedback that had a lot of static. I think I just had, I think it's called the gain. Not quite sure. I turned it down this time. I think I had it too low last time. Let me turn it up a bit. That should have gotten a lot louder. If you could give me some feedback on, does that sound okay? Is it too loud? Are you getting a lot of static now? I would really appreciate that feedback. So sorry for the messing up the audio. I'm still tweaking this stuff a little bit, and it's always kind of hard to tell how is it actually going to be when I'm not able to listen to it in real time. So anyways, hopefully that's better for it. I did adjust it a little bit here, and Arrow VR 2973. Can you also make the sheet available? There should be a link in the description to this sheet. You ought to be able to, to this sheet. Sorry, yeah, I'll share this one right after the video. It's really just this big. This is all you see is just what I have right here. But yes, I will add a link to the video. And hi, Wilkaza, thanks for hopping the stream. Sorry, I didn't see that. I'm still kind of going through the comments a little bit in reverse order. So, anyways, getting back to the Venture Global here, I express this as a percentage, and it does look like that, the additional cost that we see up over and above just the base cost of the gas is actually the, okay, so slightly louder but still low. All right, I'm sorry about that. I'm going to adjust it up just a little bit more, and then that's all I'm going to do for today, just because I don't want to run into the same static issue that I had last time. And so I'll try to tweak it more after this offline, but hopefully that's even a little bit louder for you. So for the costs on Venture Global, that's how I accounted for this in this model, which is to say I only looked at that fixed fee cost when I was looking at what are their profits here. And so that 15% of Henry Hub does not factor in at all. That's basically how it's incorporated here. And so that's why it did not include that 15% of Henry Hub as an actual sort of revenue that could come in, or I should say cash that comes into Venture Global. Now, this is actually important to understand that, and this makes sense, right? Intuitively, this makes sense. This isn't just like, hey, these are the numbers happen to correlate and happen to match. They actually use that gas, as far as I understand it, to like generate the power, right? They have gas turbines. If you look in here also, you can see they have, turbines. uh, that are actually used to draw. Why is the search not working? Man, this I think it just didn't parse the whole S1. But if you look down here in where they have the overview of their projects, somewhere way down here. I thought it was down there. All right. Well, I'm failing miserably to find things in this S1. It's a big document here, but they give a description of each individual facility, and they do talk about what they have there, and they talk about, hey, we have gas turbines at these facilities that actually power island systems is what they call them. See if I can find the section I was looking for. Yeah, so they have these power island systems like this at the Calcasieu project. They have similar description for the Plaquemines, where they say they have these gas turbine generators there, and this is, I believe, what they do. You know, how they actually power their liquefaction facility, and so it makes sense that their costs are going to be a percentage of natural gas because they actually use natural gas like directly. And so if natural gas is very expensive, their cost to generate the power is going to go up quite a bit. But this is also expensive when you understand, sort of some of the future. One of the issues why global, and I went over this last time, why venture global stock has been dropping is because that spread between Henry Hub and global LNG prices, JKM or TTF, it's been compressing. And a large part of that is increasing demand for natural gas in the United States, and that is going to push Henry Hub prices up. But because that 15% allows them to actually capture some of their again, operating expenses, their cost of transportation of gas and liquefaction. I don't know how their contracts are structured for how do they pay for the actual transportation of the gas, but I wouldn't be surprised if some of those were actually denominated in Henry Hub pricing. It's probably similar for similar where there's a fixed fee portion and then a variable portion that is indexed to Henry Hub. I would not be surprised at all if that was the case, because then that sort of lets the pipeline operators do the same thing that Venture Global is doing, where they get this kind of share in some of the upside of that of the commodity, the underlying commodity, the natural gas there, while also having some amount of kind of fixed fees revenue that just comes to them. So the whole point here is that it's not just a guess that, oh, these numbers look like they're about 15%, so I'm going to just offset that and assume that it's good. Like, there's actual intuitive reasons as to why natural gas is, why they actually use an additional portion of natural gas more than what they actually liquefy as part of their facilities, and that drives what their costs are. So hopefully that makes sense. So Wakaza says volume sound is good, and AeroVR says it's not bad as is. So hopefully that's good. I'm going to keep these settings for the future. And then AeroVR 2973 also says correct, and any heavy hydrocarbons and lights off the production goes to power production. Any heavy hydrocarbons and lights off the production goes to power production. So I think you're agreeing with me. I actually don't understand enough. I'm not in the industry. I'm not a deep expert in these things. Sounds like maybe you know more than me, which is awesome. I love to hear I love to hear the feedback from folks who know more than me. Again, my professional expertise is all in the software space. So everything I know about energy and LNG, I've just picked up along the way as I've been investing in these companies. So one other thing I did want to say, if you look at the numbers for the Plaquemines, the numbers are way higher in terms of the additional cost they have up over and above the feed gas that they have for their cost of sales. And that also makes sense to me because this facility is still ramping, so it's really hard to get a read on that. You can see the production was fairly stable. Again, it kind of ramped up all the way into Q2 and then Q3. Q3 was their first full quarter post COD, so I actually think this is hopefully the most representative quarter, because this should represent the final facility. Everything is in place with the as we expect it, and it's kind of just steady state operations at this point. The Plaquemines is as far as you can get from steady state operations, and then change the units. These are just in MMBTU. That's why they're in the millions instead of just a couple hundred. But it's 107.7 TBTU. And, it basically almost doubled from Q1 to Q2. Is like an 80% increase, and then an additional 20 to 25% increase from Q2 to Q3. That facility is ramping up. I don't expect these numbers to actually makes sense. And then in fact, if I understand correctly, they even, not only is it still ramping, so it's kind of hard to get good numbers, they also have, I think, sort of temporary power production there. So this isn't even their final, the final gas turbines and final power setup that they're going to have. So it doesn't surprise me that this as a percentage is much higher than what we might eventually expect to see once the Plaquemines facility does reach that commercial operations date, and they sort of hand it off and they say our facility is completely deployed as designed and is in steady state operations. So that was all I had for today. This was not intended to be a very long video, but hopefully that helps answer that question. It was just a little bit too much for me to write out very coherently in a YouTube comments. So that is it for today. I guess I'll stick around for just a minute if anybody has any additional questions. Hopefully that all makes sense. But that was really all I wanted to go over today. I will try to have another Meteor stream sometime, although, again, my personal life is just so busy. It's a busy time of year, especially if you have kids. So that's what's making it hard for me to really get too much content out there for you guys. All right, I do not see any additional comments, and I absolutely do not want to drag this out. Thank you very much for watching. AeroVR2973 says, thanks, keep it up. You are welcome. Thank you for watching. And again, this much larger model is linked in the description already. And as soon as I'm off the stream, I will share this one and put a link to this one in the description. Again, there's not a whole lot here. It's really just these numbers you see, but I will go ahead and put it there just in case you are curious. And James Burns 679 says, thanks again for the content. Merry Christmas to you and your family. And the same to you and same to all of you. Merry Christmas. Hopefully I can at least get another stream before Christmas. So hopefully this isn't the last time I'm saying that. But anyways, hope you all enjoyed it today. Hope that helped clarify some things. And I will